Hello everyone, welcome to UN College Digital class. So today I am going to cover the rest part of principles of insurance. In my previous video lecture, I have already discussed three principles of insurance, that is principle of insurable interest, principle of indemnity and principle of utmost good faith. Okay. So today in this video lecture, I am going to cover the rest four principles of insurance. So let's start with the slide. So first one is principle of subrogation. This principle is otherwise known as the doctrine of rights subrogation. It is an extension of principle of indemnity. So, if you all remember, in the previous video lecture, I have discussed the principle of indemnity. So, this principle tells that either the loss amount or the actual amount, whichever is lower, that should be compensated. So, this principle of subrogation is the derivation of the principle of indemnity. Okay. Subrogation means the transfer of rights and remedies of the insured in the subject matter to the insurer after indemnification or compensation. If we let to understand it in simple terms, it says that the insurer steps into the shoes of the insured and become entitled to all rights of action against the third party to recover the loss. So, if I try to make you understand this, it means after the loss happened and the insured gets compensated for the loss, then after that compensation, if any kind of profit the insurer gets from that particular subject matter, then the ownership of that particular subject matter is with the insurer. Okay. So, next let's move to the next slide. The principle of subrogation refers to the right of the insurer to stand in the place of the insured after the settlement of the claim. The insurer can recover the loss from the third party. There always exists a possibility of getting something in addition to the claim received from the insurer by the insured. We will get this understand by an example. So, this is the example which is given for the principle of subrogation. So, here the written thing is Mr. X is an insured who has taken a fire insurance from ABC Limited. So, ABC Limited is the insurer here. So, here in this case, Mr. X is the insured and ABC Limited is the insurer. So, the factory for which fire insurance has been taken, that factory caught fire after some days and Mr. X, who is the insured, incurred a loss of rupees 3 lakh. So, here the loss amount is 3 lakh. So, as the loss happened, Mr. X claimed for compensation from the insurer, that is ABC Limited. So, as per the insurance contract, the company or the insurer paid the compensation, which is 3 lakh rupees. After the indemnification has been done, indemnification means compensation. After the compensation of the loss, the officers of the insurance company went to the factory and they found out that there are certain machines which are not burnt and can be sold to the third party. The insurance company, which is ABC Limited, sold the machines to a third party and earned rupees 75,000. In this case, the principle of subrogation will be applied. Okay. So, it means that as the compensation of Mr. X has been already given, so the amount which is 75,000 that will be given to the insurance company. Mr. X has nothing to do with that amount because he has already been given the compensation, he has already been indemnified for the loss for which he had made insurance contract. So, this is the whole thing about principle of subrogation. So, we will move to our next principle, that is principle of causa proxima. The principle of The principle of causa proxima is otherwise known as the principle of proximate cause. In simple words, this principle tells that the laws should be for the nearest cause or the proximest cause for which the insurance is taken. For example, if a marine insurance policy is taken, then the loss should be out of water. If a fire insurance policy is taken, then the loss should be out of fire. Then only the insurance company will compensate. Otherwise, no loss will be compensated. This is what principle of causa proxima tells. Let's move to the slide. So, principle of causa proxima is otherwise known as principle of proximate cause or nearest cause. So, the term which is causa proxima, it is a Latin term which means the nearest cause or the immediate cause. Okay. So, this principle tells that while deciding the liability of the insurer, the direct, nearest, immediate or proximate cause will be taken into account instead of the distant cause. The doctrine of causa proxima is in fact based on the law of cause and effect. So, here proximate cause means the most dominant cause or the effective cause which causes the consequence. So, in this principle, we see the nearest cause for the loss and for which the insurance has been taken. Let's move to the example. For example, an exporting company has taken marine policy because it exports goods through ship. Okay. So, the company got a contract of exporting some quintals of wheat. By the time while exporting, some sacks of wheat wasted because the ship got a hole in it and water got through the hole. So, in this case, the exporting company will be compensated because marine policy is meant for risk of loss by water. Here, the proximate or the nearest cause of the loss is water and the marine policy is also meant for water. That's why the insured company will be compensated. So, if we take another part of this example, while exporting the wheat to another country, while exporting process is going on, it found out that there are some mice there are some mice prevailing there and they cut the sacks and the wheat got wasted. Because of this reason, the insurance will not be acclaimed and the insured amount will not be compensated, because for the marine policy, the main cause, the proximate cause is water, not the mouse. Okay. So, if the wheat get lost because of the water, then only it should be compensated under the marine policy, because the policy was for marine insurance, the policy was not mouse insurance. Okay. So, let's move to the next principle. This one is principle of mitigation of loss. Mitigation word means to minimize. Mitigation of loss means to minimize or to decrease the severity of the loss. Under this doctrine, it is prescribed that whenever the event occurs, it will be the duty of the insured to take all such steps to minimize the loss. In simple words, this principle tells that if an insured has taken some insurance for a subject matter and that particular thing is happening, then all the necessary steps should be taken to minimize the loss. For example, if a factory has caught fire and for that particular factory the owner has taken the fire insurance, even if the owner has taken the fire insurance, he should try all the measures to decrease the fire. He should use fire extinguisher, he should call fire ambulance. Okay. So, these are the steps by which the loss can be minimized. Okay. This is what the principle of mitigation of loss tells. The logic behind this principle is that the insured should not become careless at the time of loss simply because of his property had been insured. If the principle of mitigation loss should have not been applied, the insured should not have taken that much of care by saying my property is insured, I will get the compensation. Why will I take the care? Okay. So according to this principle, the insured must act reasonably to make the loss less severe and try to make each and every effort and arrangement to minimize the loss in the event of loss. This is what principle of mitigation of loss says. So this is our last principle, which is principle of contribution. So contribution means sharing something. This is the basic dictionary meaning of contribution, which is sharing something. Contribution is a right of an insured who has paid claim under a policy to call upon the insured for the same loss. Sometimes a person gets his property insured from more than one insurance companies, which is known as double insurance. I will discuss details of double insurance in the next class. Double insurance basically means that a person taking insurance from more than one insurance company from a particular subject for a particular subject matter. So in this case, if loss happens to that particular subject matter, then the loss amount will be compensated by all the insurance companies in their proportionate insured amount. You will get to understand this by an example which I will give it to you. Let's move to the next slide. Sometime a person may get his insured goods insured with more than one insurer. This is known as double insurance. In the event of loss, if he got his loss indemnified from all insurers, he will receive more compensation than his actual loss. This is against principle of indemnity. So in case of loss, he may choose to get his loss compensated by one or more insurers taken together. So we will understand this by an example which is given in the next slide. Here the example is, Mr. X is a owner of a factory. He has taken fire insurance for 3 companies, that is company A, company B and company C. So for company A, the insured amount is 1 lakh. From company B, the insured amount is 50,000 and for company C, the insured amount is 25,000. After some time, his factory caught fire and he got a loss of 70,000. So the loss amount here is 70,000. Here the principle of contribution will be applied and the compensation will be paid according to the proportion of the amount insured. So here the ratio between 1 lakh 50,000 and 25,000 is 4:2:1. Okay, so this is the ratio and the factory caught fire with a loss of 70,000. So if we do the calculation, then the 3 of the companies A, B, C will have to compensate 40,000, 20,000 and 10,000 respectively according to the insured amount. So this is all about the principles of insurance. There are 7 principles. All the principles should be followed before entering into a contract. Both the parties should know all the insurances before entering into contract. But among these principles, the most important principle is the principle of indemnity, which says that either the loss amount or the actual amount, whichever is lower, that should be compensated. So I hope you must have watched the previous video. In case you have not watched the previous video, please go through that video and you will get to understand. Anyway, if you are getting any doubt, you can ask me in the comment section. I will clear all of your doubts there. Thank you everyone.